Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to Merryn Talks Money, the podcast in which people who know the markets explain the markets. I'm Merryn Somerset Webb. Listeners, as some of you will know, we have made a bit of a tradition of hosting a live recording of the podcast the morning after the budget. So, earlier today, I sat down with a familiar cast of Merryn Talks Money guests to talk through our reactions to the budget and to take listener questions. Joining me in Bloomberg's London headquarters was John Stepek, my co-host and author of the Money Distilled newsletter, Stephanie Flanders, Bloomberg's head of government and economics, and Helen Thomas, CEO of Blonde Money. Now, this we are hoping is going to become a long-term tradition. We did this last year. Same panel? You were here last year, weren't you, Stephanie and John?
Feels quite samey.
Okay. And the idea is that we do a live podcast here the morning after the budget from Bloomberg headquarters here in London. So with me today, Stephanie Flanders, head of economics and government at Bloomberg. Helen Thomas, you weren't here last year, were you?
I was not.
You weren't, okay. Well, come every year, please. Founder and CEO of Blonde Money, and John Stepek, senior reporter and author of the award-winning, multi-award-winning Money Distilled newsletter. I will say, by the way, that this podcast has also won an award, so there's an award-winning podcast. Right, now before I start, I just want to check the feel of the audience. Who is happy with the budget? Hands up. Two hands have got, three hands have gone up. I think we've got about 350 people in the audience. Who thought it was a good budget for Rachel Reeves? More hands. Okay, good budget for young people? No. Old people? More there. Okay. For growth? Not a single hand. Not a single. That was my aim, to get to the bit where not a single hand went up. Okay, so can we start, Helen, with you? Now, the question that a lot of people asked before this budget and after it is this enough for Rachel Reeves to keep her job?
For a few more weeks. Maybe months at best. And she can thank the Fed's John Williams for that.
Okay.
Because what we have had is the market giving her the benefit of the doubt, because broadly the market, now seeing potentially more rate cuts out of the US, is sort of in a slightly more benign mood. So, yes, benefit of the doubt for now, but it will unravel. It will unravel politically, and we'll probably come on to that.
So as far as the gilt market is concerned, everything's basically fine.
For sort of the next few days and weeks.
Okay.
Do you want me to read out the bit of the OBR report that means it isn't?
No, I don't want you to read it out. No. I want you to tell me what it says.
I'll summarise.
Okay.
Borrowing is higher, and the fiscal consolidation comes later.
Yep.
That is a pretty toxic mix if anyone thinks they're going to do fiscal consolidation in the year before a scheduled election.
Yeah, so this is what the markets may be missing. There's a lot of spending up front, but the consolidation itself is backloaded, and we can't be absolutely sure that very many those things will happen. And we'll come on to the mansion tax later, which is one of the things that I suspect the audience is super interested in, and which I suspect will never happen. John, from your point of view.
Yeah, I think, I agree with Helen. I do think the other issue is that possibly people get a little bit too excited about the gilts market these days because of what happened with Liz Truss.
Yep.
And the thing that we have to remember is that when that happened, it was an extremely febrile moment in global macroeconomics. So interest rates were shooting up, and on top of that, Britain had some kind of LDI leverage inside the system. So you can think what you like about Liz Truss, but she was throwing a Molotov cocktail at a Jenga tower. That's the point. So what has happened now is the gilts market is much more stable. Also, the debt management office is managing the issuance much more. So, for example, they cancelled 3 scheduled 30-year gilt auctions. So that means there are fewer chunks of long-term debt being issued, which means the supply is down, which is another reason that yields went down yesterday, because if you need 30-year gilts, there are fewer of them kicking about. So I think all of that stuff is easy to neglect because we do get obsessed with the politics and the minutiae. But equally, as Helen said, it's also because the Fed now looks as if it might cut interest rates. So it's, there's a big chunk of things going on that make her, if she's throwing a Molotov cocktail, she's throwing it at skyscraper or, a kind of fireproof trampoline.
Okay, and this was a relatively non-inflationary budget, particularly relative to the last one.
Well, yeah, I mean, relatively speaking, it still wasn't, she was pushing back against, she sort of gaming the figures a bit over the next year by, pausing the index and the train fares and things like that. But certainly putting the minimum wage up by 4.1% is not. That's an inflationary measure.
For younger people.
Oh, yeah, and it's also, because supermarkets employ a lot of people who, I mean, to be fair, the supermarkets all pay above minimum wage. But if you're going to keep paying above minimum wage, then every time minimum wage goes up, you have to bump up your staff salaries. Yeah. I mean, quite apart from the impact on kind of wage compression and, damaging people's motivation to work, the point is they need to pass that cost on somehow. And the Bank of England itself said, earlier this year, one of the reasons food prices have gone up isn't because global food prices are higher, it's because the kind of labour costs are having to get passed on by the supermarkets, which are extremely low margin businesses, as I suspect everyone in this room probably knows. I'm not particularly impressed, but I think the reason she's got away with it is because the environment is much more forgiving.
Yeah. Stephanie, any major surprises in there for you?
Well, so the surprise was actually the market reaction at some level. And I think it also underscored the missed opportunity, because you had a budget that was, I'm not sure, at least for the purposes of today, I'm going to try really hard to be a bit more positive, because it just feels like otherwise we're going to be beating our stick over this budget for the next hour. But it's hard, I have to say, it's hard to find things good to say. But I think it was, if you're looking at the UK and thinking, is this, and many people were obviously in the global markets were thinking this when the Labour government came in, and were actually betting on the UK, putting money into the UK on the basis that this was going to be a government that was going to be more long-term, certainly more stable politically, was going to take some of these tough choices after all this chaos. And instead, you've had a series of budgets that made all the same sort of awkward short-term compromises. I wouldn't say these, I mean, they're obviously in the Labour direction. I wouldn't say they're fundamentally worse than some of the compromises that were made in the previous government, but you certainly haven't seen a step change in the quality of macro decision-making, or a government taking advantage of the fact that it had a full term ahead and a large majority. And I think in this case, you had, and our economist, chief economist Dan Hansen, had identified, you have that money on the table that you could have got from persuading the markets that actually you were willing to take some pain, that you were willing to have some front-loaded fiscal consolidation, which also incidentally could have helped in a more sort of fundamental way, helped the Bank of England to cut rates sooner. And when I saw how little the market had reacted to this one, purely with the reassurance that there was more margin for error now, but not that we won't actually be making those errors, I thought, wow, they could have come away. We had 4 basis points cut in yields. It could have been 20. We could have got halfway back to the US potentially on a day where people, as we've all said, the markets were feeling a little bit more favourable anyway. That gap with the US, there's no sensible reason for it, even if you look at the long-term fundamentals, except this feeling that UK governments can no longer do difficult things.
Mm-hmm. Yeah, which is true.
Which, based on, all available evidence, seems to be true.
What difficult thing do you think that she could have had a go at?
I mean, the obvious one, but it's funny because, it's a bad sign for a government that has this many years ahead that you're constantly going back to things they might have done a year earlier. Yeah. So, this time a year ago, we were saying, why did she sign up to that national insurance cut that Jeremy Hunt, or the 2 successive Jeremy Hunt national insurance cuts, and why hadn't she not just said, we're going to reverse those, but we'll be back to where we were. We'll keep rates exactly where they were a year ago, but we don't think these cuts are affordable. That would have saved her £20 billion of pain. Then we got to this budget. We said, well, why hasn't she done, why hasn't she been braver on saying the world has changed, and actually tackled some of the things on income tax? Same with the spring statement. We had a complete change in the global environment with Trump and the intensification in Ukraine. And yet they still missed that opportunity. So I just think, the real shame is that we are constantly saying she's missed an opportunity, she's just doing the minimum. And, we're going to look back and say, wow, there's so many things that this government could have done that it's not done. And instead, as we're pointing out, the welfare bill is going up and the same fiscal challenges are there.
Yeah, well, we were talking about this earlier, about the signals that we're sending here. And one of the sort of extraordinary things that you can look at the moment is see that the total welfare bill is remarkably similar to the total income tax bill. and you get to a point when you're looking at maybe young people working and working very hard, paying their income tax, and they can now look at it and go, wow, pretty much every pound I pay in income tax is going one way or another into the welfare bill, and that's a terrible signal to send to our young people.
And it's just a weird signal that this government, I mean, you've got a particular thing around, I think it was really disappointing and, a dereliction to not push harder on the welfare reform bill.
Yeah.
But to not get anything in return for this kind of important contribution to child poverty, but you would always have said, given the downsides of that, you would always have said it had to go with some more serious reform. And to end up with nothing on the other side of the ledger, I think...
Well, there is something, the return to face-to-face appointments.
Well, and I think that is...
that sounds little, but actually maybe quite big.
Yesterday someone asked me, what's the sort of the opposite of an unexploded bomb, the sort of positive things that might unexpectedly go well in the next year. And that was the one I highlighted. I think there is a possibility that will have a much bigger effect on the rolls. But remember, you've still got a lot of people who are, the fixed number of people already on the rolls is what's really driving up the bills.
Yeah. Helen, let's pick up that then. Let's go for something positive. Were there any hidden positive surprises in there for you, do you think? I have a horrible feeling the answer is going to be no, but come on, give it a go.
Well, I want to give some credit to Rachel Reeves that she was trying to square an impossible circle, and it could have been worse. So
it could have been worse. That's not what I'm looking for.
No. Okay. Yes. All right. Let me think about that. It's quite difficult.
Okay, John.
Well, I was hoping Helen would have an answer.
In terms of well, I've got to get back to this thing about welfare, because the front page of the newspapers this morning, pretty much singularly all negative. But, it's, what is it, the shirkers, the strivers are paying for the shirkers. So we just roll on all the time, and what's this government about? What is its strategy? What is its narrative? What is its central message? Where are its priorities? And then this tussle over welfare turned into a totemic debate about the two-child benefit cap, and now it's rolled into shirkers versus strivers, which is surely not what the government wanted it to do. Yeah. So, sorry, that's negative again. Okay. Well, she has, as we started on this, given something more to the sort of Labour. It's a Labour budget for Labour people. I'm a Labour person doing progressive things. She said that. I think she has sold that to some degree. Okay. So perhaps she has managed to bring a bit together the splitting elements of the Labour Party.
Okay, brave effort, Helen. Brave effort, but...
Yeah.
Actually, do you know what? The landfill tax. That's the one thing that I was thinking.
So
there was a landfill tax, which was basically, I'm not an infrastructure guy, so I didn't pay that much attention to it, but they were going to multiply it by about 10 times. Yeah. It basically meant you could never build a house again in the entire country. So that was probably a good idea to kind of
But slashing that would be a much better idea, because
that would be a much better idea.
It is a huge extra cost on construction. It's one of the reasons why we have dumping across the UK, because it's so expensive to move stuff to a landfill. Stephanie?
There is, what's ironic about this government is all the good stuff they're doing is the stuff they're really trying to hide, or at least not talk about very much at all. So, as she did mention, John Fingleton's report on the making it easier to build nuclear power stations. That goes to this whole swath of things of why is it so flipping difficult to build anything in this country. And there has been quite a lot of active involvement. If you look, for my sins, I was actually looking at some of the amendments in the, I can't remember what it's called now, Land Planning and Infrastructure Bill, which for some reason has still not got royal assent. But anyway, there was an intervention actually by number 10 to make that even tougher in terms of overruling local councils on big projects, a number of things that should make it easier also to do big infrastructure. And those things, if it becomes not impossible to build a nuclear power station, I think that's something that, future governments will benefit from. Yeah. But it's an important change which, let's face it, all of those, the planning, all of those things got much worse under the last 15 years. There was no concerted pressure from the Conservatives on that. So, I think that kind of thing matters. Also, I know it's not very popular, and many people have said it's something that might get reversed, but we were going to have to move to a way of taxing electric cars. And for them to have actually been brave enough to say, OK, this is the system and it's going to come in a few years' time, somebody was going to have to do that. And we don't want it to be another thing that governments are incredibly unbrave about that we have for the fuel levy
I
as well.
suppose the other positive, sticking with electricity, the other positive you might pull out is the beginning of a recognition that electricity bills in the UK are too high because of the piling of green levies on and on and on and on and on. And of course, they still have to be paid. Shifting them into general taxation doesn't take away the fact they have to be paid, but it takes them off electricity bills.
And it probably should have been in general taxation.
Yeah, it should have been in general taxation in the first place. But it's a recognition that we have a problem with electricity prices. So that was a very minor positive that I could.
There was the IPO thing as well. Stamp duty
Well, yes,
for
but that
3
just
years.
irritated me, to be honest.
I mean, it's very limp.
Because and this is the if you IPO, then you don't. There's no stamp duty on the trading of the shares for 3 years, which it's fine. But the reason people don't IPO in the UK is because they're not going to get a good enough price. And this of only 3 years, sure, you capitalise that into it, you get a small uplift possibly in your issue price, but not much. Yeah. And stamp duty should go across the board, don't you think? I mean, this suggests again that she's been listening, but can't take the big steps to make the proper change that is needed. But
I think that is the problem, and it kind of boils down to the very first question that you asked, Helen. Like the issue here is that this is a budget done essentially to save the Chancellor's neck, and that means she's basically doing it for a tiny audience of Labour MPs. Yep. And that makes all of the difficult things even harder. I mean, it was always daft to promise that she wasn't going to put up income tax. I don't know why people are so obsessed with the manifesto, because it's very clearly been broken. I mean, if you don't think fiscal drag is putting up income tax on people, and I don't know what to tell you, to be absolutely honest. This stuff is, it's very lawyerly kind of like way of looking at things. But if you look at all the problems that we fundamentally have, it is about politicians being afraid to tell people hard things, and that's why they're hiding the planning stuff as well. Because there's a cohort who really, the YIMBYs want to hear it, but the NIMBYs don't. They don't want to be told that. And as soon as, even the YIMBYs, as soon as it's actually in their backyard,
YIMBYs tend not to live near.
Exactly. A YIMBY turns into a NIMBY very, very quickly. Very quickly.
I think that's the problem, and I don't know how we get beyond that. Except for that, I guess the electorate has to get so sick of the kind of sclerosis and the plaque building up in the arteries of the state that eventually we get somebody who's got the voter mandate to put a total clear out.
To get to crisis. Can I ask you, Helen, about, we're talking about fiscal drag, which is such a big deal in the UK. And we worry a lot. We talk a lot, John and I, on the podcast. We talk about the rich leaving the UK. And we talk about the millionaires and the billionaires, and they're all going to Milan and Luxembourg and Dubai, etc. But I'm not sure we talk enough about high-income young people. And so they're seeing fiscal drag like this. So they're starting to pay higher levels of income tax very early. And then, of course, we saw yesterday the thing that I was surprised by. I didn't see that coming, the freezing of thresholds for student loans and the freezing of interest rates for student loans. So you will see increasingly young people hitting this level where their marginal rate of income tax is 51%, really remarkably early. And this seems to me to be one of the not particularly discussed problems in this budget.
Well, this is the thrust of if you do a smorgasbord rather than be brave and do the big income tax rise on everybody, that you then end up hitting. I mean, presumably that was done to scrimp back some pounds somewhere to get the numbers to add up in that year onwards. Yeah. And so actually, I think that the risk of this unravelling. I mean, we're here less than 24 hours later. Is extremely high that this unravels. Don't forget that just because she made the statement doesn't mean it
gets through.
Yeah. You have to vote on each tax measure, then there's a second reading. I mean, there's the whole finance bill that goes through. Quite possible that if one of these becomes a totemic issue, that maybe it is something on that. Maybe it is something for young people that there's a big fuss about, that various MPs aren't happy with. And this is the issue politically now, because of what happened on the welfare bill, because of now this budget's moving slightly to the left, that side of the party is got a veto. It can push harder for things. We're seeing it in other countries as well. Look at France, other places where there's fragmentation politically. And so yes, it could unravel, and then we now know what we do now know is her political capital is very low.
Yeah,
it hasn't yet got lower as a result of what happened yesterday, but for it to go up, you'd need to see the polls shift.
Okay, so she's done very well. She's hung on to her position as one of the most unpopular chancellors in the history of the UK, and it hasn't got much worse.
Yeah, that's right. But this is only going to get rid of the original sin, if you like, was that we've had a government with a huge majority but no mandate for various of the things it's done. And they are never getting away from that. Because really their real mandate was just don't be the Tories. And then actually some of the things they're doing are actually similar to what the previous government did, and then that's not going well with anyone. And so the only way you end up resolving that is they'll switch leader. That might give them a bit more of a mandate because that person will have some slightly different policy platform. But that still won't gather. That's not what every Labour voter voted for.
Yeah. Sorry, Stephanie.
No, I was just going to push back a little bit on Helen. I mean, I think it's maybe that's the parlour game that we should be playing. Is you've identified, Merryn. I think the student. The freezing of those thresholds for student loans is actually one of the worst things that was done as sort of on the sly. But I also think it's one of the least likely things that's going to get voted down, because all the evidence, talk about what the visible evidence for, all the evidence for is that you can really squeeze students for a very long time. Remember how long the fees stayed exactly the same? And you had in the university sector students facing, worse and worse services, and there's been no pressure to change it. So I think should be one of the ones that's most controversial.
You can squeeze students, but can you freeze relatively high-income 32-year-olds who suddenly look at their income and go 51%?
But this obviously comes from having been fixed in terms of the basic rate.
Yeah.
Because as you know, we actually have in terms of the average tax rate on average earners in the UK is much lower than certainly any other countries in Europe.
Absolutely.
We're much more reliant on the high earners. But we've just ended up with this really skewed system where people are, rather than having the basic rate be higher for everybody, we're hitting these very high marginal thresholds.
Yeah, and maybe they'll leave, maybe they won't. We'll find out in a few years, won't we? Okay, so let's talk about the thing that I think everyone would like us to talk about, the mansion tax. We're talking about things that might not make it. So this is a tax that will take years to figure out, quite a long time to implement, will be relentlessly challenged. Do any of you think that we will ever actually see a mansion tax on houses supposedly worth over £2 million?
I do.
You do?
For the point, actually, of me saying, this Labour MPs something may unravel, I would think it's broadly extremely popular with Labour MPs to do something on this, even if it's not very well designed, which does appear to be one of the key criticisms. So actually that I would put on the could get passed absolutely easily. Are you talking about the mechanics?
Is it logistically possible? Is anyone ever actually going to pay an extra tax on their house that may or may not be worth £2 million?
I think so.
John?
I mean, I guess the problem is the logistics are quite serious because, you've got to guess at the valuation, and the tax itself reduces the value of the house. And then on top of that, I've already had kind of press releases saying, is it worth splitting your house into two different homes that are each worth £1 million?
I've already had 2 or 3 of those conversations literally yesterday alone.
What's ironic
split off the basement.
Having got rid of the multiple dwelling tax relief, Jeremy Hunt, so everybody's put their houses back together again, and now they're going to have to
split them off again.
Fantastic.
Yeah, we're moving into a new age of tax dodging.
Big granny flats, basically. I think that sort of thing.
Yeah, well, that will solve the granny flat problem.
I think we'll have an election before then, by the way.
I do think
that's the question. They don't make it because there was an election before it happens.
Obviously, I'm sure we all think that council tax should be reformed and that it's a completely useless tax at this point. And I guess if I was trying really hard to be somewhat sort of quixotic about this, I would say they have now... remember, we had even the first attempt, Ed Miliband's attempt to have a mansion tax was the kind of first effort. Now they've actually managed to break the first barricade in terms of saying, OK, we're going to have this higher level. You're quite right, Merryn, it's going to have lots of technical issues. But there is now an opening. If you say, well, OK, if we're going to revalue some of the houses, there's just the tiniest possibility that the mess that this causes, that the clear need for councils to have a better basis for funding, may coincide into having some kind of cross-party effort. And you know who could be the person who would do it? It would be Nigel Farage. Because he has 12 councils now who are all realising that council tax is completely useless. And actually they have a stake in reforming it in lots of different councils across the country. And if he's listening, I would say that would be a really good thing for him to show that they were a serious party that wanted to do serious things to help local and central government.
Want to do something really complicated.
And I think it's really likely to happen.
Okay, interesting. Interesting. A positive, almost a positive.
I'm trying to think it's likely to happen.
John, let's talk about ISAs.
Yes.
Right, so you and I have talked a lot about how we don't approve of the £20,000 allowance for tax ISAs, and this makes no sense, and that's too much cash to have if you're rolling it up every year.
Cash ISAs, yeah, exactly.
Cash ISAs, it's too much. We're happy with stocks and shares ISAs. And I think we were hoping, or certainly I was hoping, that the cash ISA would be reduced, and the element it was reduced by would be funneled into UK-listed stocks, and that didn't happen.
No, so it's like, so it's still £20,000, and I noticed people get quite confused about this. So from April 2027, the ISA allowance will still be £20,000, but rather than being able to stick it all in cash, you'll only be able to stick £12,000 in cash.
Unless you're an old person.
Unless you're over 65, which is the other thing that made it. I mean, it's almost like they can't do anything without just adding a little quirk. And again, I mean, I won't rant about it, but it comes back to that idea that you can't have any losers. And it's like, you know, why are we leaving it for the over 65s? I mean, there's people under 20 who want to be saving cash for a property deposit, and they don't need that to be in shares. That's one of the few times when I would say, no, you need this soon, so you cannot stick it in something with a long risk horizon. But parking that, the only thing I will say is, at least it's a signal. You know, it's a very, again, it's kind of limp. It's a bit like the 3-year IPO
like
thing.
stamp duty business.
Yeah. And the other thing is people keep talking about how, oh yeah, but I can put my money in a money market fund. I said, well, that's not the point. To get to the point where you know there is a money market fund into which you can put cash, you need to have grappled with getting an investment platform and going into a stocks and shares ISA. So that's one thing why I would say that's not a kind of a reasonable objection to it, because we're actually just trying to get people to engage with investing, which a lot of people in this country currently don't.
Yeah.
You know why this has happened with the sort of limp measure? Is it's government by committee. It's a group of, you know, Treasury civil servants, SPADs, others sitting around a table saying, OK, right, we're going to definitely do this measure. Oh, no, but hang on, what about this interest rate? OK, well, we'll give them a little bit of this. Oh, no, but what about that lot? OK, well, can we hand them back bits this way? Oh, no, hang on, that's the knock. And that's what's been going on, which is why it's been such a leaky, tortured process.
Are you saying I'm being unfair by blaming Martin Lewis for that one?
Not blaming Martin Lewis for everything.
Saint Martin.
It's interesting, isn't it? Because one of the groups that pushed back were the building societies. You know, if you take away the cash ISA, mortgage rates will go up, so you definitely can't do that. And that's one of the reasons why we ended up with this mishmash. Yeah,
and you get the interest group, depending on how good their lobbying is. And now I thought that was quite a smart angle to take, because when you're lobbying, you then need to go for, well, what is really going to worry or upset this government? Oh, well, they're quite obsessed about mortgages, mortgage costs, because, you know, that was the story for Rachel Reeves' mind. You know, trusts led to higher mortgage rates, which led to her losing her job.
Yeah.
And I don't want to lose my job, so don't do that.
Yeah, the one thing we haven't talked about is salary sacrifice, and how John isn't going to be able to buy the new bicycle he wanted.
Oh, I didn't spot that. Is it gone? And everyone said it was going to go. Did it go?
I think so.
As someone who's used it.
I actually didn't check. I kind of assumed it did.
I thought it was just pensions.
I'm sure that was
I thought they
wrong.
saved
I haven't looked at the absolute micro detail.
I thought it was just...
Okay, you can have the bike after all.
my bike.
See? Can you not tell? The salary sacrifice thing, the thing I find most interesting is the fact it's not coming in until April 2029.
Yeah.
And part of that I'm wondering is if, because by signalling she's going to do it, everyone who was using it is going to have to go back and have a chat with their employer, or their employer's going to have a chat with their staff and explain about how this is going to affect their overall compensation. And so I'm wondering if it's one of those things that she's kind of thinking, well, this is just going to unravel itself rather than be something that we need to legislate for aggressively. I don't know, but it kind of feels like, I mean, because you're going to have to start talking about it now, because it is complicated.
It's really complicated.
I think that's for the length of time. Is actually, I think they were told that it's just because employers were actually going to have to rework a lot of their contracts and all their systems for their payments. And so I think, and the internal approach to company pensions, all of that was going to have to change. So I think she was told, you cannot rush this. You're going to have
just too hard.
But it should be said, you know, it's way more money, 10 times more money than you're going to get from the mansion tax. And it's something that will just probably not get noticed.
And something which doesn't mean much to many people initially. They'll only find out later how much it's going to cost them. Questions from the audience.
Given the dependence of this country, or the income tax on high net worth and super high net worths, has this budget done anything to deter people who are considering leaving but yet haven't from leaving, in terms of capital incentives for their investment to stay?
Is there any reason given by this budget to stay in the UK, is the question. John, what do you think?
I don't think so. If you were already thinking of doing it, then, there isn't anything, if you can see the writing on the wall, it's going to go left before it goes right again, for want of a better word. It's going to go big tax before it goes low tax again. And so, no, pretty straightforward. Don't think so.
No, head shake from Stephanie.
There have been some question marks of whether you could unpick some of the most damaging changes from the removal of the non-dom, but she's obviously not listened to those, so no.
Yes, the inheritance tax is the big thing.
Inheritance tax.
It's like people do not want to give 40% of their global assets to the UK government just because they stayed here for 10 years. What's his name? Lakshmi Mittal just left, and that's why. That's exactly why.
Yeah, so that would be a very straightforward fix. But no, it hasn't happened. So I think that'll be a no. That'll be a no. Can we have back here, white shirt, please? Thank you. I'm afraid all these questions are depressingly easy to answer.
That's great.
As a London parent who is trying to provide a bedroom for my 3 children and has just purchased a £2 million house to do that, they still don't have a bedroom because I've got 2 lodgers to pay the bills. Am I being punished for not having a vasectomy? And is there a pithy name that you can give to this tax for my situation? Is it the London family tax or the vasectomy tax, or what is this?
Anyone got a snappy name for the having too many children in central London and not being on welfare tax?
I'm glad my legs are already crossed.
Again, I'm afraid that one was depressingly easy to answer as well. And I'm sorry, maybe you should have bought a cheaper house or moved out of London, or personally, I would just give up your job at this point. Peter, here in front.
I just want to pick up on something that John said, because this does feel awfully like the 1970s to me. What I'm interested in the panel's view is this 1974, or is it 1976, or is it 1979, where we actually get a revolt against the current circumstances?
Oh, interesting. 1976, Helen?
I think, what was the year?
You won 1979,
No, I'm thinking, what was the year with the 2 elections, 1974? Yes, well, it's nice to do the historical parallels, and actually it's good because we need to think that when everyone gets frustrated with politics, it's quite useful to know there were other times when things were very fractious for very understandable reasons. But I think, history rhymes, doesn't repeat, does it? So the key thing now, of course, is debt to GDP at 100%. So we're still actually sitting on a knife edge here of at any minute. I know she's built in more headroom. The ABR sensitivity said I think it was a 1 percentage point move in gilt yields would clear that headroom. And last time around, I think it was 0.6. So, she has got more space. But we are in a greatly volatile world, as Rachel Reeves herself has admitted. And so the house of cards could fall apart politically and economically at any moment. So I think actually not quite analogous to the 70s, not least because news travels so much faster. Markets move
Everything
so
is
much quicker.
so much quicker.
Yeah. Crypto markets are open on Saturdays. Didn't have that in 1976.
There is something, certainly if you look at the dynamic in the Labour Party currently, there is something that feels a bit reminiscent of that whole period. I don't know if I'd date it or whatever, but where you started to have, you could imagine a leadership battle at some point, we might disagree about when it is, that is from the sort of establishment centre, sort of Callaghan-type figure, or Healey as it was then, and the Michael Foot. You can imagine that kind of battle happening quite easily, actually, given the concerns around the support for Green Party. And I did think yesterday, it's quite interesting. We look, obviously I run economics and politics globally. We're used to thinking right and left are no longer the key fractures in politics. It's much more complicated than that. And that's all true. And we see that when we look at the opinion polls. But actually yesterday it opened up a very old-fashioned space for the Conservative Party, which actually I think Kemi did quite a good job of walking into. That we're suddenly back to, at least between the two main parties, a very old-fashioned, do you want to spend more on high tax and welfare, or do you want to shrink the state? And if the Conservatives kind of lean into that actually makes it quite difficult for reform, I think.
Yeah, thank you. Right, more questions. I think we've got one here.
Given the number of policies that were trailed in advance of the budget around the housing market, there were rumours about stamp duty, potential capital gains being applied to primary residents, an all-new annual property tax, council tax bands being doubled at the higher end. And then on the big day, it was a big nothing. That was a surprise to me. I wondered if anyone else was surprised that there was very, very little that happened in the housing market, given what a big impact the housing market is having one way or another in almost everybody's lives.
Yeah. John?
I mean, I suppose that didn't surprise me in as much as they're not going to want to do anything that kind of makes house prices go down any more than they already are in real terms. The mansion tax is obviously just a sop to the left. It may or may not happen. I mean, the real problem is obviously the inability to get, houses being built. And that is partly a function of the fact that house prices aren't going up anymore. And probably the main focus, if she wanted to help the housing market, was more on pushing back against inflation so that interest rates can come down a bit. And to be fair, I mean, one thing that did happen yesterday as a result of gilt yields going down is that you've actually seen mortgage rates tick ever so slightly lower over the last 2 months. And I suspect that will continue for as long as the bond market remains roughly kind of happy with what's going on. So we'll see. But yeah, no, it didn't surprise me because there's so much other stuff. And I don't think she could raise a lot of money from the housing market in a way that wouldn't make the voters just rebel.
Also, I mean, a lot of the rumours were obviously nonsensical. I mean, we're never going to abolish stamp duty, for example. It was never going to happen. That was a very bizarre float. I know, we'd all love it, but it's never going to. Worst tax in the UK, give or take, and there's a lot of competition. Right, we have another one in the front here.
Yeah, if I could just come back to John's comments about cash ISAs and whether that's actually going to work. I would have thought that if Rachel Reeves wants ordinary working people to invest more in stocks and shares, and you mentioned that you've got to get your head around the money market sort of approach to do that, wouldn't it make more sense to do that in the safest long-term way, which is to put more money in their pensions through salary sacrifice? And yet that seems to be being cut. So I don't know if you have any insight into those two seem to work against each other.
Oh, no, they do. I mean, there's absolutely no doubt. I mean, it's a completely confused, it's not confused. It's basically, again, it's a sop to the idea that they support investment, but everything that they're doing in the tax system pushes against that. It's kind of, so the tax on savings interest, property, we basically got NI imposed on unearned income yesterday. We've got lots of measures that, dividend taxes, that sort of thing. And, how the fact that pensions constantly have the rug pulled out from under them is another thing that militates against private sector pensions constantly. So I think you're absolutely right. I think that if we spent more time focusing rather on gimmicks, making the tax system simpler, but that's not going to happen because I think yesterday had something like, I'm sure Bloomberg added it up, and it was like over 800 different measures, unless I'm getting that wrong. But we had a chart.
88.
88, sorry, 88, wasn't it?
Yeah, sorry. 800, I think still be reading
I need to get my glasses when I'm reading these charts, but it's just...
That's Money Distilled.
It was more, yeah, exactly. It was more than anyone for a very long time, and they have been getting more and more complicated as we go on. And again, that's partly ducking difficult decisions. But
just the direct response, so I was just checking it and thinking, and not that I'm a Treasury spokesman, but it's the costs of the salary sacrifice are predominantly, it was going up to 8 billion, and a huge chunk of that was going to not just higher rate taxpayers, but the very higher end, people who are putting their bonuses in and other things. They claim, judged on the current thing, it's 74% of basic rate taxpayers will be protected by the cap because they're not putting more than £2,000 in. So just as a direct response to that.
The problem with that, though, is that it comes back to this thing of people not seeming to realise that the folk who are basic rate taxpayers now aren't basic rate taxpayers for their entire lives. It's like the number of people who hit 40 and hit 45 during their life cycle is much greater than the current number. And so what we're actually doing is we're punching people in the face when they get to the point where they should be, when they're at peak earnings, and should also be at peak savings. Because that's kind of the big issue. Everyone probably hits kind of 40 or 50 and starts to look at their pension, assuming they're not working for the public sector, and goes, oh my God, I'm going to be poor when I retire. Yeah. And that's why you need that kind of thing when people are on 40 or 45%. So it's not enough for the government to turn around and say, oh yeah, but we're protecting this lot.
Yeah.
No, we're getting to the stage where, I mean, the minimum wage
8 billion is a lot of money. I mean, if a third of that, say, is going to people who are on maybe $500,000, it just is. It's
sorry, but I think that there's too much of this. Again, it's that sort of zero-sum thinking, as opposed to why don't we stop worrying about how this guy's got this and start thinking about, why is the economy so sclerotic and piling it up with extra complexities all the time?
I'm partly saying devil's advocate, but in these conversations, we do tend to think of tax relief spending as great spending that is somehow very different from other forms of public spending. You're deciding to spend 8 billion because you're foregoing that you could have spent it on something else. You are deciding to spend 8 billion on people being able to do these pension savings. Well, we should remember that is exactly the same as any other.
I'm going to stop this one here, because this is a much longer conversation about the extent to which how much you should have in a pension, all that kind of thing. We'll come back to this, but we've got a very enthusiastic question answer at the back here.
Hi, good morning, thanks. You are now selected as our new Chancellor, and you have one wish. This is pre-budget. What would your one major policy be?
Ooh.
Cut welfare spending.
Yeah, exactly. That's what I was going to say. Just find a way to cut welfare spending.
Or try and even do what she tried to do, which was reduce the rate of growth, which is what she was trying to do.
Yeah, failed on that. John?
Yes, it is a good question. If I'm trying to think of a policy, then, something I've always been mildly attracted to is a kind of land value tax. And if you were looking at...
No. Ignore John. Stephanie?
I think you have to, it has to be welfare.
Although I do think if
PIPs in particular.
If there was outside welfare, one thing that I really would have loved to see, and it wouldn't have been hard and it would have sent a brilliant signal, would be the full abolition of the stamp duty on equity trading. And we've talked about it on the podcast over and over and over. It's not a big money thing, 5 billion here or there, and it's huge signal to the rest of the world that we were taking our equity market seriously. That would have been, I think, the one, and so easy, so quick, such a signal. Here in the front, you've had your hand up a long time. Thank you.
Given that fiscal drag seems to be a very good way of raising revenues without letting people know you're raising revenues, how long, particularly given what's happening in the States with, do we have Kevin Hassett coming in as Fed chair? How long until we have QE back in the UK?
Ooh, Stephanie.
Really long time, I think, actually. That's one of the things, that's one of the missed opportunities, right? Inflation has narrowed her room for manoeuvre in some ways. And obviously she was sort of punished a bit for doing things last year that increased inflation, because then that slowed interest rate cuts. But one of the advantages we have in the current environment from the higher inflation is that the Bank of England has plenty of room to cut. Yeah. And if you look at the revisions that were made in the next few years' growth, one of the reasons why we haven't got into the fact that she wasn't faced with a hole to fill thanks to the Office for Budget Responsibility, because their lowering of real growth was actually largely offset by them deciding actually inflation and wages were going to be higher over the next few years, and that they hadn't fully factored that in their nominal GDP, cash GDP estimates. So without getting too much into the sausage making, I think, I don't think we can see in a few years' time, but I don't think QE's on the horizon.
Helen, QE coming?
I think it could come back, sorry, not QE, but asset purchases could come back if we do get to a dysfunctional point in the bond market, which I do still yet see there being a risk of, purely because huge amounts of debt, as we know, throughout the world, huge amounts of issuance. Inflation, broadly speaking, is higher now than it was in the sort of 50-year period before. And so at some stage, there's going to be a serious case of indigestion. Yep. And then they may well need to sort of step in with bond purchases just to stabilise things.
Okay.
Not QE.
All right. There's a sort of maybe for you. More questions? On the aisle here, that's close by. Thank you.
Thanks. It's just a quick question on unemployment. So unemployment rate's been ticking up the last 2 years, even a little bit before the last GE, from like 4% to 5%. given John mentioning the minimum wage going up and everyone mentioning the fiscal drag, do you think this budget is going to sustain, keep ticking up that unemployment rate or perhaps even accelerate it?
Anyone want to say anything beyond yes?
Well, don't you think there's sort of not been much discussion of recession risks here, but a lot of stuff talk about recession in the US. I mean, I know we're sort of bumbling along at pretty much zero, a bit above it. OBR said this doesn't really change the growth outlook that much, this budget, but, what if there is some sort of shock? Could be external, could be here. What if on the salary sacrifice element, I think that's going to be a hit to employers, the cost for them will be going up. Minimum wage, as you mentioned. So, God, I know I sound really gloomy. I don't mean to sound so gloomy. I mean, obviously, we go into a recession, we'll have loads of Bank of England rate cuts, so that will help. But
we have new workers' rights, etc. So there's a lot going on.
Of course.
That doesn't necessarily move in the direction of making people think to themselves, gosh, I'll go out and employ another 10 people next week.
Exactly. Yeah. So I think it's a risk.
I mean, I think you've obviously, one of the big factors that's been supporting employment has been immigration, and if that we're now on so that's something which is kind of offsetting some of this. But, we get back to the welfare reform thing. It's not the unemployment rate that matters, it's the huge number of people who
it's the inactivity rate.
Inactive.
Yeah. Okay. Could someone please ask a question to which we can give an upbeat answer? Here we go, in the front here. Well, whatever the question is, we're going to have an upbeat answer. Yeah. Okay?
I'm not sure if this makes sense. Hold on. I wrote it down. Because how much is fiscal drag affecting how much people spend, especially since households have a high marginal propensity to consume?
Well, I mean, any reduction in your income is going to affect how you spend, right?
Yeah, I guess it's because it's kind of in the future. That people maybe don't think about it in the same way. Because actually, going back to your point there, Henry, the point about fiscal drag, I think people are aware of it, but I do not think that they fully understand what it means in kind of number terms. And so I don't think that people will sit there and think in 5 years' time my income is going to be lower by this amount, therefore I'm not going to spend today. My own view tends to be that if people have got money in their pockets, they spend it. But I'm not an economist, and I know that economists have slightly different views about expectations. I think people are a lot more short-term, perhaps, than economists.
And also this is an interesting one because it means people need to have an understanding of how inflation works to understand how fiscal drag works.
And it's not visible either. It's like inflation, you go to the supermarket every week, and that's why the Bank of England, people care about food price inflation, because when the price of food goes up, people do notice it, and they will change their behaviour. Beyond that, something that's a bit longer is kind of hard to do, especially if your wages are going up as well, and you can't quite work out how much more you're getting compared to how much more your life's costing you. It's a good question.
Okay, sorry, just on the comparison, because there was a lot of discussion around whether they would raise the basic rate of tax and then offset that with a reduction in the national insurance. And that would have actually been slightly better for lower income or sort of basic rate taxpayers, actually, people in the lower brackets, and they tend to spend more. So on your point, I think this is going to have a bigger impact on spending potentially than if they'd gone that route.
My apologies to those of you who didn't get your question asked. We'll be around for a few minutes afterwards, so do ask them then. And all there is to say is thank you so much for joining us today. Hugely appreciated it. And thank you to my wonderful guests. Thanks for listening to this special post-budget episode of Merryn Talks Money. If you like our show, rate, review and subscribe wherever you listen to podcasts. Also be sure to follow me and John on X or Twitter @MerrynSW and John_Stepek. This episode was produced by Summer Sadi and Moses Andam. Special thanks, of course, to Stephanie Flanders, Helen Thomas, Vic Wakely and all those at Bloomberg who helped with this production. Questions and comments on this show and all our shows are always welcome. Our show email is merrynmoney@bloomberg.net.